Hello, everyone. Welcome to this week's Investment Trends, where we discuss the latest news in the stock market and the economy. So for this week, the week of October 28th, a lot of market activity was driven by technology companies' earnings reports. So we had a large week of earnings reports, and some of the biggest, most notable ones were Apple, Amazon, Microsoft, Facebook, and Intel. So two of the best performers after their earnings reports have been Amazon and Intel. So as of Friday, both Amazon and Intel saw their stocks increase about 7 or 8% due to better than expected earnings reports. They were able to beat expectations on revenue and profits, and Amazon saw their cloud business and advertising divisions continue to grow. On the other side of the spectrum, we had Apple, Microsoft, and we also had Facebook. And one of the biggest laggards, or had the worst performance on the day, was Thursday, was Microsoft. That stock was down around 6 or 7% on the day, and this was due to slower revenue growth. Also, Apple continues to see increased competition in China and slower than expected iPhone sales. So that also had a little bit of an impact on the stock. So Thursday, we saw a big drop in the market, and that was mainly led by those technology companies. However, we're shaking off the month of October, which ended up being a down month for the stock market as we head into November. So the big news Friday morning was the jobs report. So the new jobs report data came out, and it was far lower than expected, and we saw the unemployment rate actually drop to 4.1%. So although we had a weaker than expected jobs reports, some of those earnings reports from companies that came out Thursday evening lifted stocks higher on the day on Friday to try to make up for some of those losses that we saw on Thursday. So this is the last investment trends report that we will have before heading into the election next Tuesday. Want to make sure that everyone keeps a level head, and if we do see any volatility in the market, just know that majority of the times that is very short term. So what we're anticipating next week and the results coming out, the results that are most highly expected are those that would lead to a divided Congress, which would essentially not be able to pass some of the policies that either candidate has talked about. This has also been the years that the market has had the best performance when we have seen a divided Congress. So something to keep an eye on as we head into the election. One of the other things that's notable to talk about, although we saw a 50 basis point cut in interest rates from the Federal Reserve, the 10-year Treasury still continues to rise. So for those of you that may have been looking for lower interest rates, lower credit card rates, unfortunately that just hasn't taken effect yet. However, if we do see cuts later on in November and December, we could see a bit of a drop in mortgage rates. So something to keep an eye on as we head into next week and head into the election. Leave a comment below if there's any stocks or companies that you're following.